Hey everyone, it's Nick with Us versus Herd. If it's your first time here, hit the subscribe button. If you want to get notifications for when we go live, hit the bell button. Definitely appreciate you here. Definitely appreciate that you're watching. If you're not yet a member of our free options trading group, the link is below. Also, we have a link to our brand new Discord channel. You can hit the link below for that. Hope you guys had a great week. It was a pretty crazy week. You know, if you're here right now, say what up. I see in here we had EZ, Carmine, Oliver, Keith, Matthew. What's going on? What's going on, everyone? What's going on? Man, are you guys having fun yet? Having fun? Crypto Slice, how you doing? Drupka, nice to see you again. You're becoming quite the regular here. Kit, thank you. Also, Easy, Keith, and Kit, thank you so much for the donations. Really means a lot. Thank you guys so much. Matthew got paid 2 days in a row. I'm having a blast. I'm wearing the hat for you, Kit. Oh, man. Jeff, what's going on? Yeah, so, man. FC, how you doing? All right. I mean, seems like a lot of people are getting paid. A lot of people are getting their faces ripped off. I mean, this week was definitely intense. Today, I was pretty much out and about trying to get the rest of the Christmas presents I needed to get. I actually closed down on the day, $10.50. The only trades I did do today was a $20 play on Facebook that obviously didn't work out. And then I did some gold futures. I also had another gold position on as well. Scott, what's going on? RJ, how you doing? Look at those charts, man. All those saying you can't lose the pussy. Yeah. I mean, today definitely made me want to get into the market, but at the same time, I was like, well, I had things to do. I don't want to be stressed out. I gotta get these Christmas presents. I had to get the Christmas presents. I couldn't not get them. And I was out and about till about 1 p.m. So pretty much when I was on Discord and everything like that, I was out on my phone. I was trading from my phone. But, you know, starting this week, I started to lower my risk and started to take things off the table. You know, down $10, definitely not something that I wanted to do or proud of. But at the same time, I really didn't have any trades on, and my risk was very small. You know, kind of looking at my portfolio here, I'm gonna bring this up for you guys here. You know, unfortunately, you know, before we get into the trades, I'm gonna show you my TD Ameritrade balance here for the week. You guys can see that. So my gains this week. Pretty much everything, you know, before we go into the trade, like my gains this week were very small. Like I took profits right away on a lot of things, and yeah, we closed up the week like up 161, which for me isn't like a very good week. I would say it's a pretty poor week for me. Like last week we had a good week. The week before that we had an even better week. This week we're gonna close up. I'm going to actually close this week red, and the reason why I'm going to close it red, I'm going to show you right here. You know, it's saying my gains for the week. I'm up 161 per account. You know, which it is what it is. I'm glad that I have those gains. Definitely wasn't a great week for me in terms of trading. You know, maybe I was distracted. Maybe, you know, I had the doctor's appointment the other day. Who knows? You know. Things happen. Some weeks you just don't perform as well as you should, and especially like on a humongous down week this week, definitely should have performed better, but a lot of things got in the way. And the reason why I'm up 161 on the week. The reason why I'm gonna be down, so I'm gonna be down about $150 on the week, is because of IBM. These IBM calls expire, and they're worth about, say, 288, but it's really like 300, 305. So Hamed, how you doing? So it's really about 305, so I'm going to lose these. These will fall off, which will be nice. However, they do expire, which will impact my P&L for today. So instead of being up 161, I'm actually going to be down about 150, which, you know, on a week like this week, definitely shouldn't have been the case. You know, I guess I would have been up money if those weren't expiring today, if they weren't expiring today, but they're expiring today, and my performance did not like exceed in any way. You know what I mean? Drupka, go check your old videos a few months back when it was only 3 people in your chat. You might be surprised to see the name Drupa. Don't take my word for it. Check. I appreciate that. Day one, Drupka. Appreciate you watching my videos over however long I've been live streaming for, since like the summer. So I definitely appreciate you, man. Thank you so much for watching. And Richard, and thank you. Even though we lost on Facebook, Richard, you came through. So to kind of go over my trades real quick. So Facebook, I bought a day trade. I bought the 130 calls when it was ripping up here, when it kind of flattened out here. I bought them for we bought them for 8 cents. They did rip up to like 16-20 cents. I didn't cash out, and as you can see, that went to max loss. But I only risked like $16 on this account and $19. Yeah, I got 10 cents, so $20 on this account. So I got a 8 cent fill on this account. I got a 10 cent fill on this account. That obviously, you know, it was a low risk play. Probably was more of a gambling play. Probably was, as you guys know from watching me, it's not usually a play that I do. That's why I didn't like announce it on my page or anything like that. It's not normally a trade that I do, but I was like, for $20 to see if it can go back up, and actually got pretty close. It almost went up to 129. I mean, surprisingly. So, and Richard, thank you so much, and appreciate you. I know you had a rough week, Richard. I mean, outside of the stock market, I think you had a good week. I think you had a good week in the market, but William, Merry Christmas. Linda. Brian, what's going on? Anyway, so this morning I did put on a strangle on /GC. Only on this account, I bought the 1300 call, the 1245 put, cost me 40 cents. You know, mainly a short play on gold. I also had a short strangle on GLD that I put on yesterday that we went over. And those were pretty much what, you know, those I made a little bit of money. Like, I'm up $20 on GC. I'm up $4.50 on the day on GLD. So we made a little bit of money there. You know, GLD, I was looking for it to break this 1260, and then it finally did. It finally broke below, but didn't really go much lower. You know, went a couple points lower. So hopefully on Monday, or maybe even Sunday night, depending if the futures are lower Sunday night, I can take those off. You know, keep in mind, Monday market closes at 1 p.m. Eastern. Tuesday the market is closed as well. Greg, how you doing? Hitting them. Man, you guys are crazy. Definitely insane. And right now, I know it shows YouTube as like video output is low, so I may be a little bit choppy. Just so you guys know, I did order last night a brand new PC to kind of fix those issues, so that way it looks a little bit more professional, and that way it looks you know, we don't have these issues. Yes, I bought a brand new MacBook Pro, but obviously the MacBook Pro can't handle the heat here. Market is too hot. YouTube is just ridiculous. You know, this week for me, you know, that was pretty much all the trades I did today. You know, this week for me, it was I took profits early, and I didn't let them run, which is usually good, very good discipline. But in this scenario, I didn't get paid. And yesterday I did go over, like I had the 135 put on Baba yesterday, and now it's at 131. That would have been worth about $4, $4.50 or so, you know. And I closed it out for a $70 loss. IBM yesterday, I had the 119 put yesterday. I did sell it for almost 100% profit. I think it was like 80% profit. I was very happy with. Obviously, that ended up at 110. You know, so hindsight, like a lot of guys, I actually have a video coming out this weekend regarding leaving profits on the table. I had the right trades on. I just took profits too early. That's why my gains were so minimal, and I didn't let them run. And normally that's a good thing to do, to kind of collect profits and redeploy them. You know, I'm a big believer of, you know, collecting your profits and then redeploying your capital. You know, that's one of the big things that I like to do, and one of the things that we do in this channel. But at the same time, you know, it does make you feel a certain way when the positions that you had on, you could have been up a few $1,000s this week. You know, this could have, instead of being down $150 on this week, it could have been easily like a $2,000 to $4,000 week. You know, but hindsight's 2020, and at the end, you know, this was the worst week. CNBC was saying this was the worst week in 10 years on the stock market. You know, you think that when you go down over 200 points on the S&Ps, that eventually we're going to get a bounce. And yes, we did get some bounces, but they were very short term, but they were very, very fake out. Like, our brains are trained, like, if the S&Ps go down 100 points, our brains are kind of looped, kind of trained to kind of say, hey, we're going to get, even if it's not a long-term bounce, we're going to get a short-term bounce here. We're going to make some money on the bull side. You know, as you can see, like with the S&Ps back in when we were between 2,600 and 2,800. Yes, the sky fell from 2,800 down to 2,600, but then we had a bounce, then we fell again, then we had a bounce, and right now we just broke through and we went down to the bottom. You know, we're down here at 24.16. So if you're here now and you made money this week, comment got paid. If you lost money, comment learned a lesson. Go through some of these comments here. You guys are down with Robinhood. Yeah, I mean, a lot of people are having issues with Robinhood. So I think I had 2 green weeks in a row that were really good for me. But I guess if I was going to have a red week, I would rather be down 150 than down 1,000 or something. You know. Greg got paid, only trading spy. Linda, I'm here. I'm right here. Billy learned a lesson. Keith got paid. Jordan got paid. Shadow Drone, how you doing? Linda made some bucks on the Qs. QQQ. I've got to learn to hold on to trades like Linda. Yeah, I mean this week, typically when you hold trades that are profitable, they typically don't pay out. But this week, in particular, if you held on, you would be up mega dollars, you know. So I'm down 150. Same Baron, same. I'm down 150 this week. You know, for me, down 150 plus 150 is pretty flat as well. Broke even, give or take 100 all week, better than a big loss. Yeah. I mean, yeah, I would take up or down 100 any week, then down 1,000, down 2,000, or something crazy like that. Like people this week could have definitely. I mean, I know for a fact that people blew their accounts up over this. People kept buying the dip, and when the charts are like this, if you're looking at the S&Ps, when there's charts like this on the S&Ps, you're not you don't catch the knife. Like, just go along with it, because when you're trying to catch the knife and you keep laying in long positions, keep laying in long positions, keep laying in long positions. You know, I was thankful before the Fed on Wednesday. I had long positions on IBM and Microsoft, because you know we had two major down days, or 2 or 3 major down days in a row. Then we had kind of a flat day. So we had 2 major down days and we had a flat day. And then on Wednesday we were going up. I was given just enough time to close my long positions before we ripped back down. So, you know, this could have been a way where if I still had those IBM and Microsoft positions, I could easily be down about 1,000 to 1,500 this week. So I'm definitely thankful that I was able to mitigate my risk and minimize my risk in that way. But you know, it is what it is. You can't win every week. And I'm not trying to make excuses or say anything. I mean, it is what it is. I mean, I think that in retrospect, I had the right positions on. I just didn't let them run. I was taking profits at like 20 to 30% instead of trying to take them at 100 or 200%, which is, you know, there's nothing wrong with that. You know, Greg, nice. I thought catching the knife was trying to get into a position while it was in a free fall. Well, FC on the 1 year chart, what do you call this? If you're looking at the 1 year chart, if you're looking at the 1 year chart in SPX, what does this look like from 2650 to 2416? On the daily chart, it's undeniably a free fall. The only reason why it stopped free falling is, you know, on these days is because the days ended. You know. Right. But is it buying the dip or is it trying to get in while it's free falling? FC, this is definitely free falling. This is definitely free falling. Buying the dip is like in here where it's just like it comes down and it kind of settles in, and then you buy the dip. Well, you would have got screwed here too. But either way, you get what you get what I'm saying. Tax selling. This market holding trade was hard to make 100%, but any day trade. Yeah, I mean, it definitely played with your emotions. And if you're brand new to trading, maybe your ignorance made you some money. Like if you just started trading this week and you bought some puts, and this is like your first trade, you bought some puts and you made 100%, 200%, and you didn't know, you know, just be careful with that kind of mentality. If you're brand new to trading, you know, it's going to catch up with you. But as you can see, like in a normal market, it's more two-sided. Like 2018, we had more two-sided markets than in 2017, you know. And this is the biggest dip that we've seen in a long, long time. This is the biggest sell-off we've seen in a long time. Very long time. I mean, let's go back here. Yeah, in the last 3 years, there's no sell-off that's been close to this. Yeah, I mean, the last time that maybe we felt some major pain, there was like a flash crash in 2015. In the summer of 2015, it dropped from 2,100 all the way down to 18,860. But that was due to like the Asian markets, and there was a flash crash and global panic. Obviously, we recovered pretty quickly, but you know, in times like this, you're definitely feeling the hurt right now. This has been the best week in a long while. Greg, I'm happy to hear that. I'll lose 150 for you to have the best week you had in a long time. I don't feel bad about that. I traded 94 cents for 321. Is that good? That's fantastic. I mean, you made more than 300%. You won. Let me rephrase that. I thought it was buying puts during your free fall would be trying to catch the knife. Hence, it's a fall knife and want to catch the down move. I don't know. FC, I think so. I'm just saying on the daily chart, it's a free fall. I'm sorry, on the 1 day chart or the 1 year chart with daily candles, but on like 15-minute increments or 30-minute increments, obviously there was some bounces in there. Hamed didn't lose money this week, which is nice. Good. Since I didn't have that many trades to go over, yesterday we had more of a spiel about the S&P historical. And to kind of recap, if you weren't here yesterday, in the last 50 years, there's only been 2 occurrences where we had more than one red year in a row. 2018 looks like we're going to have a red year here unless we can come back up to 2690-ish area. It appears we're going to have a red year. So unless we get about almost 300 points back in the next 3.5 trading days, we're going to have a red year here. Can you please show me the breakdowns on Linda? I don't know. I don't have the breakdowns of Linda's trades. I don't know what she trades on a daily basis. She just day traded SPY or QQQ. Oliver, yeah. So you're telling me there's a chance? Yeah, there's definitely a chance. I mean, we did drop 200 points, but now we got to get up. But keep in mind, the lower we go, the bigger percentage moves up that we need. It's going to take bigger percentages moves to move up back to where we were. So it's definitely going to be a lot harder. That's why going down, we go down a lot faster than when we go up. You know, because we need bigger percentage moves to get back up to where we were. Anyways, what trades you guys want to look at? Going back to GLD, I'll talk about that. I was saying that GLD really broke out when it broke out above the 118 range. I put on a bearish strangle. I bought the 119 put and the 122 call just kind of as protection, because if it does run up, it's going to probably run up pretty quick. Looks like we're coming down a little bit here, but it's going to be a slow process, it seems. But I do have 14 days left on this trade, so I did buy further out, 2 weeks out or so. So I'm looking forward to kind of my goals on this trade, really to reach back out to like the 117 level. Definitely free fall. I was questioning whether to catch a bounce or follow a move trying to get into the free fall. Okay. Yeah, Hamed, GLD is slow. But since it broke out so fast, I thought it was going to rip down pretty fast, but I guess not. But I've only had the trade on for 1 day. I've only had the trade on for 1 day. I don't know. Thank you. Kit, if you lose 50% of your capital, you need to realize 100% gain and make it back. Making back losses is tough. Yeah, I mean, like, let's say you had $5,000 in your account, just for an example, and you go down to 1,000 in your account. It's gonna take you a lot more time to get back up to there than it did to take it lose it. I mean, it's kind of, it's just math, I guess you could say. Obviously. XOM, oil is in a multi-week falling wedge. I see a squeeze coming. We should definitely buy some plane tickets before the squeeze. Yeah, it's just insane. I mean, this is pretty much mimicking the rest of the market right now, which is kind of scary. If we're looking at XOM, we're at a multi-year low as well. Let's see if we can go to 3 years on this. This is the lowest it's been in 3 years, which makes it scary. I mean, yes, people are piling in short, and that's the other thing. Like, okay, last time it was this low was back in it was 2015. So August 2015, we were this low, and on XOM. So the one thing that, like, what you're saying, Oliver, is about the short squeezes, is even at these levels, after falling like this, after falling this much, people get greedy and they still continue to short it. They still short down here. Like after you're getting fed here, they still keep shorting, and that's when like the real short squeezes happen. Like, you know, people get really stuck, and then they don't only like lose their profit, but they actually end up giving more back. XOM is on the 1990 trend line. Yeah, it's terrible. Terrible. Spence AEM made me a lot. Can have had at times. Yeah, I think AEM is a low volume stock, Billy. Steve, Amazon Strangle. Yeah, I mean the only problem is right now with Strangles, like the one thing that really made me not want to get into too many trades today or even yesterday was the fact that next week we have a slow week, which then you kind of think to yourself, you know, maybe you should sell premium because Theta will just kind of chop that up, and also IV is really high. I mean, we're at a yearly high on Amazon. Like IV rank is implied volatility is at the highest it's been all year. You know, that doesn't say a whole lot because Amazon, you know, ripped up pretty nicely this year before pretty much giving it all back. But the reason why I didn't want to go too heavy into next week is, one thing, I want to kind of end the year out on a high note. You know, maybe I'll do some day trades next week and, you know, that kind of thing, but not get anything too specific, but probably put more trades on in January. So what I was thinking is, like, in terms of Strangles, like for next week, Theta's going to eat that. Like, let's say we have a flat week next week. I'm not saying it's going to happen, but eventually this is going to even out. Like, eventually it'll even out, and people make themselves believe like we're just going to fall for forever, and just like, hey, the market's just going to go for it forever. Eventually it's going to flatten out and really decide what it wants to do. Like if you're looking at, you know, oil, for instance, you know, it dropped really, you know, it dropped for months, but eventually it stopped. Eventually it stopped right in here for almost a whole month from November to December. It eventually stopped, and then when it stops, you don't know when it's going to stop. Just know that it's going to come. Just know that when it stops, that crush is going to be real. So a strangle, when you buy Strangles when the implied volatility is so high, you're going to get crushed like it's going to be insane. You're going to lose money. You're going to lose money like that, and you're going to be pissed. The other thing is, I didn't feel comfortable shorting premium into next week just because these moves have been massive. I mean, just enormously. I mean, we dropped, you know, this week definitely. I was thinking about selling some premium, but after a 200 plus point move on the S&Ps in 5 days, I was like, forget it. Let's just kind of take it easy. Thursday, let's take it easy. Friday, let's take it easy. I'm not trading Monday. Tuesday, markets are closed, so really Wednesday, Thursday, Friday is our only opportunity to for me personally. And if you guys are trading Monday, fine, but you know, I'm gonna take the time off. I'm gonna take the 4-day weekend, spend time with my family, and just kind of take it easy. Samuel, what's going on? Nice you're here. Steve, what I'm saying for Amazon, like an Amazon Strangle right now, if you do it, what I'm leading up to, if you do an Amazon Strangle right now and you do it far out, like January or February, while implied volatility is high, and we get that crush week, you're going to instantly lose money. So it's better to short premium right now for long term. Like if you're going to do something 40 days out, 60 days out, I would definitely lean towards like shorting premium versus doing a strangle. You know, buying a strangle for a debit, because when we're at a yearly high for implied volatility on Amazon. Eventually, as you can see, we go up, we come down, we go up, we come down, we go up, we come down. Eventually, it's going to come down. Eventually, we're going to go up, and as you see, we're at the top here. Eventually, it's going to come down, and because we've been going down for so long, we're getting closer than we were a week ago to leveling out or even going back up. So, you know, yes, I'm not saying you can't make money on it. I'm just saying, Steve, the risks are stacked against you. yes, we can go down next week, and you would have been pissed. Like, why did I listen to Nick? You know, you don't. I'm just giving you my opinion. You know, we can go down straight down again next week, and your Stringle would be worth a bunch of money. That could happen. But right now, when I look at trades in the market, when I look at specific trades, I look at specific things, and one of those things is implied volatility and how much have we gone down already? How much more does it have to give? Does a strangle make sense? And then you have to really apply the right strategy to the right market condition. You know, you can have the right idea, but the wrong you can have the right idea but the wrong strategy, and you'll lose money. Like, you could have, you know, buying premium versus shorting premium right now. You know, that's going to make a big difference at this point in time. So, Tobin, sorry for the little rant there. I kind of went off. Man, appreciate it. Thank you for the $10. You guys have been really generous to me today. I can't. And you guys, you know, Keith donated, Easy donated, Kit donated, Richard, Tobin. I mean, what do I got to do here? Brian K. Nick, what's your setting on the implied volatility chart? So the implied volatility chart you can only see on the daily chart, if you're doing like 1 year or multi-year chart. You can't do it like on 15-minute increments. But basically, you just go to studies up here, and you can go to add a study, and it's under I. So if you go to all studies, it's under I, and then you go to this one right here, this first one under I-L, implied volatility right here. This first one, this first one here. So Steve, I'm not saying that, going back to your question, you know, doing a strangle, I'm just kind of pointing out to you, like, before I put a trade on, I always think about the ways that I can get screwed. And right now, there's a lot more ways you can get screwed on a strangle when implied volatility is higher than not. Wally, appreciate it. Thank you. Samuel, what about the bank stocks? Yeah, GS, BAC, I think didn't really go. Actually, BAC finally broke down after I took the trade off yesterday, down $28. I mean, I was glad to take the trade off, but it finally did what I wanted to do. One day too late. You know, the banks are breaking down. GS has been going down GS has been going straight down since early November. I mean, just straight down, just terrible. I think JP Morgan is actually the better looking out of all. Actually, not anymore. They were up until this past week. They were the better looking out of all of them, but now that's done too. So, you know, the way that I see it, you know, we're reaching every single chart that I'm pulling up. I have to go to the 2-year chart, which means we have to find levels of support in the past. You got to look to see what happened in the past. You know, this is most likely, if you see back here, probably going to come back down to the 90 range. You know, we're getting close. So when these stocks start getting close to levels of support, just be very watchful that we're going to have some flat days ahead. You know, I'm very cautious if we have, like, for bulls, I think the best case scenario is if we have some flat days and then we rip back up. The worst thing for bulls is when you have these major down moves and then we rip back up, because what happens pretty much every time is we just give those all back. You know, we need bulls for a bullish market. We need levels of consolidation right now. We need to find levels of safety, and right now we're getting close on some of them, but S&Ps need to go down a little bit lower, but we're getting close. We're getting close. Yeah, Brian, the implied volatility only shows up when you're looking at the 1-year chart or multi-year chart with daily candles instead of the minute increments or hour increments. Yeah, BAC was a tough one. You know, I should have probably traded GS or JP Morgan, but BAC looked like it was, like, I liked that BAC was leveling out, and I put the trade on, and it just stuck there. And then premium started. Steve, BAC was a good one, good example of the premium crush that I experienced. Just to kind of show you some examples here, a real example of premium crush. So I actually I actually put the trade on, so it came down. So BAC came down, and IV was up, and then it came down a little bit. So I put a strangle on, but then down here, because it was flat a couple days here, it came down even lower. And even though the stock eventually did head lower, like when I was holding it, IV came down and I instantly lost money. So even though it was going in my direction, I was losing money because of theta, and implied volatility was just crushing those options. So that's a recent example of something that happened to me. So that's why when you got IV at a 52-week high here, you got to be very cautious about buying premium, especially going into the last week in the year. Jordan, I think the market definitely needs the long weekend. I agree. You know, I don't think the market's going to get much better. And at this point, you know, it's going to be very hard for it to get green. You know, what I was saying for a long time, you know, once we break 2,600, we're definitely going to have some big trouble. You know, we're most likely looking at the 2,300 to 2,400 range. You know, that's actually coming true faster than anticipated. You know, back down in here. But even there's not really great support from around 2350. We did have some nice consolidation for a month, but you know, we don't have very strong support up here because 2017, like I said many times, was a year we just went up a lot. Samuel, I use the 15-minute charts on my trade grids here, my flexible grid. I use the 15-minute chart because it allows me I've tried 5-minute charts, I tried 1-minute charts, I tried 10-minute charts, I tried 30-minute chart, I tried a 1-hour chart, and I find that the 15-minute chart allows me to get enough data to make a decision and not be emotional. Like the 1-minute chart, the 15-minute chart are just out of control. You can make a lot of different decisions. 15-minute chart, you really slow things down, and you're able to make decisions as those bars close. You're able to do it on a slower pace. But you get to see a little bit of the bigger picture, and that's what's worked for me so far in terms of charting times. Nick, you got a tutorial on Tasty Work. Billy, I do. I have mobile and I have desktop. Steve, take it easy. Merry Christmas. We could all pitch in to get a delivery of our Bob. That's a couple thousand gallons of unleaded. Yeah, we would need a primary fueling location though. Let's see here. Trying to get to some of your questions here. Marion, sorry I missed you. Facebook held strong through the bad news yesterday, so I sold the 133 put this morning for a small loss. If I waited, could have made 6,700 by the end of the day. Yeah, that was the story of my life this week, and I actually have a video coming out this weekend regarding leaving profits on the table. Like IBM, I left big money on the table. Alibaba, I left big money on the table. Microsoft, I left money on the table. Pretty much every trade this week I left money on the table, and that's just the way it goes sometimes. You know, there's a lot of this market going straight down. Definitely makes you more nervous and makes you not want to hold on, especially when you see you go from profitable on the trade to red to profitable again. It kind of messes with you, and at the end of the day, you have to protect your account. You know, this week I would say is a pretty flat week for me. You know, I made some money, but then those IBM calls are expiring, so I'm actually going to be down about $150 per account this week. But at the end of the day, I have capital to trade next week. I have capital to trade next year. I played it safe. I didn't blow up my account. There's always going to be new opportunities. You know, now we're down to these levels. There's going to be opportunities when it moves back up. There's going to be opportunities if it heads lower. So you're going to get another chance. You know, the one thing that I don't want to do is get lazy and hold on to things when the market shifts. I don't want to be in a position when the market doesn't give up gains like this, holding on and hoping for the best. And, in markets like this is when you can definitely get very sloppy with your disciplines. In 2017, when the market was going straight up, you got sloppy because all you had to do was buy the dip, hold on, come back a couple days later, and you made money. Now you can short the rip, come back a couple days, and you're up money. But it doesn't really teach you anything about trading. I think the most difficult thing was holding on when it was negative and then selling it and looking at it again, seeing that you could have made a profit if you stayed with it. Yeah, I mean, that happened, Samuel, that happened to everybody this week. Happened to me, happened to pretty much everyone in our Discord group, happened to everyone on Facebook, on our Facebook group. Yeah. So I'm always happy to close a week green, even if it's just $1. Yeah. Yeah, you get to fight again. Anyone got a truck? Live near NY? I think most people here, I think, live in like Cali. I live in the Midwest, Chicago, and most people. I think there are some people that live in New York, but looking back through my trade history, I keep finding more money on the table. Yeah, I mean, if you're a disciplined trader, this type of market, you're going to leave money on the table. But keep in mind, your discipline is going to save you in the future. In the long run, this market is very short term. The way that what we're experiencing right now in the market, your disciplines are going to save you 8 or 9 times out of 10. Just because you're feeling some pain now, but your disciplines are going to save you 8 or 9 times out of 10 in the future, when the market changes and the market's not this violent. It's going to save you. Dustin's from Minnesota. Carmine's Chicago. What up? Definitely going to have to do. I was thinking, like, I don't know if this is something that you guys would want or something, like some sort of yearly UVH meetup might be kind of cool somewhere, someplace. Anyone had positions on XLRE? So this is a real estate ETF. Yikes. Looks bad, man. It looks bad. However, the 52-week low is 29. So I definitely would be concerned about this right here in the 30s, and then 29 is the low. So it doesn't seem like it has a lot to give up if it's revisiting lows from 30, 31. Billy says that'd be sick. Cali, come to NY. That'd be epic. Real estate, yeah. I'll take a trip to Cali. Yeah, Cali might be the spot. Vegas. Everything looked kind of bad. Yeah, I mean, any chart that you pull up right now, it doesn't look good. And starting about what was it, like a month and a half ago, when we started to pull up charts, everything was just kind of getting destroyed. Everything was starting to get really messed up. Okay, got lucky on a put. I'll stay away in the future. No, I'm just saying that, like, when people ask for insight or just understand that I'm giving my opinion. There's people in this chat right now and people in our Discord group that made a lot more money than me this week. Just because I'm the guy on YouTube doesn't mean that my ideas are necessarily the best ideas. I just try to provide some insight from the way that I see it, so that way you can kind of use it for your own judgment and say, that makes maybe I didn't see that angle before. I'll adjust, or no, Nick, you're wrong. I'm going to go ahead with it, which is fine too, because there's a lot of people that definitely made a lot more money than me in this group this week, and I'm happy for them. I really am. I really am. But also some people, this week was a particular busy week for me. Not trying to make any excuses or anything, but sometimes like some weeks you have great weeks, some weeks you have bad weeks, some weeks you have flat weeks, and that's just the way the trading life goes. Like on a big down week like this week, should have made a lot of money, right? But I'm coming out flat. I made some money on the trades I did this week, but because I was bag holding those IBM trades that I showed off earlier in the stream, those are going to expire and those are going to eat into my P&L this week. So I actually had to make double to actually offset that. And I was going to do that with my BABA trade, but then I closed my BABA trade out for a loss. And then now it's up 400%. So that was just the way the week went for me. It's just how it went. I don't feel bad about it. Linda, thank you for the $10. I appreciate it. Thank you. Yeah, Greg, October broke the market. Yeah, it was it. It was it. And technically the market broke in February. Bulls were confident. We broke in February. The market broke in February, and bulls were very confident because buy the dip always worked, and then just stopped working. Like I said, the eventually what the market is doing will stop. Like eventually it will stop falling. Eventually it'll stop going up. Eventually it will stay flat. Eventually it will stop from being flat. So you just have to keep that in mind. If it's doing something at one point in time, sooner than later, it's going to stop doing that. And that's why as an options trader, if you start losing money, you have to kind of think about like, oh, maybe the market changed and I have to adjust strategy. Your strategy is not good for every market. Like the strategy you use in here is definitely a way different strategy that you use up in here. From April to September, you use a different strategy, and then from October to December was a way different strategy. So you just got to keep an eye on that. Eye out for that. So if this week was a red week for me, I made money in the market, but those calls ate into my profits. I traded okay, but we did leave a lot of money on the table. So go big or go home. Is there a quick way of comparing which side is more expensive between calls and puts? I guess you could just look at the pricing. I mean, if you're looking like I was saying the other day or yesterday, there was a very big skew on the VIX. So here's a good example. So on the options chain, here's VIX for January, 20 days out. Look how cheap these calls are. So these calls are only $1. Here's $1.75, 65 cents. But if you look at the puts, look, the puts are $9, $7, $6, $5. So the market is skewing that pricing in that the VIX is going to fall. And as you can see, like, if you could look at the chart, just kind of give you, VIX is almost, it broke out above 2750. And that's why the puts are so expensive, because people are thinking that the VIX is going to go down. Meanwhile, that's why the calls are so cheap. So this is a good example of kind of the difference of this is when the market thinks that it's pricing in a down move, and then the calls are so cheap. Now, if you buy these calls and it goes up to 50, you're going to make bank. However, if you buy these puts right now and it goes back down, if you buy these puts right now, it goes back down to 24, 25, you're not going to make bank. So RJ, I hope that answered your question there. But yeah, these options are skewed to the put side. So the puts are more expensive than are way more expensive. I mean, these are almost 10 times more expensive in some cases here. So just be aware of that. Option pricing. If you're not familiar with option pricing, look up charts. Like, I think that I identify option pricing pretty well, but the only reason why I do that is because I spent a lot of time in these option chains looking at price and looking at expected move. The only way to understand option pricing is to go into it deep. and find out when you lost money and find out when you made money on options, and figure out what the price needs to be for you to make money. 10 minutes left in the stream. What do you guys? Anything else you guys want me to cover? We got 10 minutes left in the stream. Linda says it's 54 right now. It's actually not too cold right here. It's been in the 40s, which I guess is pretty cold for you guys. But 40 here is like springtime. Yeah, so we got 10 minutes in the stream. Anything else? Yep, are we having a Christmas group chat party? Yeah, the one thing I do want to say is I definitely appreciate, I mean, every day you guys come and watch the stream. I love talking about the stock market with you guys. I love trading with you guys. You know, definitely appreciate you guys. I mean, this year in terms of trading and getting involved with the UVH fam and bringing the community, like one of my goals when I started streaming was to bring everyone that watches this channel together, and you guys have joined the Facebook group, you've joined Discord, and you guys are very active and you guys want to help each other out. I mean, you guys help me out a lot. I try to help out where I can. You know, I just want to say I appreciate you guys, and this is, you know, in terms of us versus herd and what we're doing here, this has been like one of the best years ever. Bear market trading tips. I rely heavy on IV percentile when I shop for options. I still can't really tell if they are expensive or not. Bear market trading tips. I think you're doing fine. I think you're doing fine, Linda. You know, the best thing that you can do is be safe in this kind of volatility. And the good thing about bear markets, it leaves for a lot of two-sided action. So for option traders, we're going to see a lot of opportunity coming up in the next couple months or even years. Who knows? But I mean, I hope the volatility keeps up, because volatility is what we need as option traders to keep making money. You know, 2017 was a slow year for option traders. I mean, you made money, but it was freaking slow. It was better to buy stock and just sit on it the whole year and come back a year later. You know, Nike, Skate MFM. Basically, I was actually looking to short Nike, but it was kind of expensive. We did have some IV crush here, but I felt like it wasn't enough. You know, it did go up 7% today. But if you look at Nike, it just came back into range. So it didn't look that exciting to me. The earnings saved itself from pretty much utter destruction, unlike every other stock. But it does look like it had some strength today. You know, even in the second part of the day, it did dip. It did sell off a little bit. You know, about $1.50, or even $2 even. But it pretty much maintained the rest of the day and looks pretty bullish. So, you know, Nike could definitely come back up above 75, 78. I would be very cautious about the 78 area. As you can see, it has double or triple topped here in the past, so you just got to be careful of that. Samuel, no videos for Monday and Tuesday. However, no live videos because I'm not going to be trading on Monday. I do have videos for Saturday and Sunday coming out this week. Hopefully that will motivate, inspire. They're kind of different videos. They're more informational videos to motivate, inspire, and kind of maybe have some self-reflection. FC, no, I will be streaming next week between Wednesday and Friday. I will be. We'll be back at it on a Wednesday. We'll be back at it next Wednesday. Yeah. T is at a multi-year low. I think I don't even know if 5 years was enough. No. Yeah, I mean, this is the lowest it's been in a long time. I mean, how long does it go back? 28. Yeah, AT&T is screwed. The last time it was 28, which does look like there's some support here in 28, was in 2011. So 2011 was the last time it was at this price. So trade with caution. Trade with caution. And the other thing that I want to say is a lot of people, especially like a lot of newer investors, just because a stock has gone down a lot doesn't mean it should go back up. So just keep that in mind when buying stock or even trading calls or putting on any bullish position. Just as a testament of this week, just because it went down a lot, like S&Ps went down 100, it then went on down another 100. So just because something goes down a lot doesn't mean it's gonna go up. So just keep that in mind. At this point in time, we need a catalyst for us to move us up. No catalyst. We're just trying to find areas of support and consolidation. Are your strategies moving forward to be more neutral or bearish or mix of everything? Dustin, I'll always balance my portfolio based on the need. So if it looks like we're going to consolidate, I'll probably put on some bullish positions. But right now, I've just been taking it a trade at a time and going slow. I have not been trading 10, 12 positions. I've been trading like 1 to 3 positions. I have not been trading big because I want to stay nimble. I want to be able to move. And when I get in trouble, I want to have capital to play defense. Billy, I appreciate you, man. Thank you. Your gut feeling, what do you think broad market short squeeze will occur? My gut feeling is we're going to see the 2,300 to 2,400 range coming up is what I think. And then hopefully we can consolidate between 2,300 and 2,400. What's your stream or video drop schedule for the long weekend? So usversasherd.com, I'll have my schedule updated for this weekend. But Monday and Tuesday, so I drop a video at 3:30 p.m. Central every day. So Saturday, Sunday, 3:30 p.m. Monday, Tuesday, no stream, no video. Spend time with your families. Take it easy. Don't think about the markets. Don't think about that. Then Wednesday, I'll come back 30 minutes after market close. Wednesday, Thursday, Friday, and we'll be back at it. But yeah, I mean, I think the reason why Linda is successful in such a short period of time is because she puts in the work. Like a lot of traders, and I think that the people in our UVH fam understand to be a good trader, to be a profitable trader, and to make consistent returns. It takes a lot of work. Like options trading, it's a business. It's not something that you get rich quick on. It's not something that you just throw money in and you're making all this money all the time and your account's just flourishing. You know, there's been countless people in our groups have made $5,000, $10,000 and within the next few months they then lost it all. So just because you make gains and think that you're outsmarting the market, it takes hard work to keep it. It takes hard work to keep your gains. Like, you know, you're trading with real money. This is a real business, and it takes real work. Just like anything in life. When you go to a job, you put in work. If you're sleeping in your cubicle all day, you get fired, you know? Richard, take it easy. Have a great vacation, man. Thanks again for the $50. I really appreciate it. You know, so I think the people in our group understand that this is not a get rich quick. You need to put in the work. You can't just make money because it doesn't work that way. Eventually that money gets taken from you, you know? Seth, nice to see you. Yeah, if this video was of value to you, I appreciate you hit the like button. Thank you. Trupka, love you too, man. Illegal smile, nice to see you. The market's not the lottery. You can't just gamble. Yeah, I mean, you can get lucky in the sense that you've made gains quickly, but those can easily be taken with you based on that trading strategy. Merry Christmas, Linda. Appreciate it. So, I'm about to sign off. Gonna go spend some time with the fam. Take it easy. Merry Christmas. Happy holidays. Whatever holiday you celebrate. You know, just take the break. Take the break. Whatever. If you don't celebrate Christmas, just relax. Relax. Have a nice dinner. Go out to eat. Have some drinks. It'll be fun. But definitely appreciate you guys. Thanks so much for watching. I will see you guys. You'll see me some videos this weekend, and then we'll live stream on Wednesday. You guys have a great holiday. Have a great Christmas. Merry Christmas.